US dollar Canadian dollar holds steady amid softer US dollar and trade uncertainty.
Canadian dollar Bank of Canada, optionality and delayed cuts. TD Securities. Gold, silver prices steady, trade uncertainty, strong payrolls in focus. Australian dollar US dollar, RBA warns on entrenched inflation risk. BNY.
Trump administration set to revoke basis of US climate regulation.
United Kingdom NISAR GDP estimate, 3M, fell from previous 4.296% to 0.3% in January. Argentina Senate passes Milei labor reform, advancing pro-market overhaul. U.S. stocks may move back to the upside in early trading. Ripple price forecast. XRP tests breakout strength amid muted institutional and retail interest.
Australian dollar US dollar trades near recent highs amid elevated Australian inflation expectations. Yo, 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 guess we should go. You guys ready? Let's go! Bum, bum, bum. Oh, hey, before we get going, I should do the disclaimer. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please.
Oil prices head lower as IEA cuts demand forecast.
Mom! I'm doing my webinar on YouTube. Past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Yoo-hoo! Good to see you. Okie dokie, Lucy. So, welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. So let's do some techies and some fundies. Australian dollar, US dollar trades near recent highs amid elevated Australian inflation expectations.
Ripple price forecast. XRP tests breakout strength amid muted institutional and retail interest.
US dollar, Canadian dollar holds steady amid softer US dollar and trade uncertainty.
Oil prices head lower as IEA cuts demand forecast. Canadian dollar, Bank of Canada, optionality and delayed cuts. TD Securities. Gold, silver prices steady, trade uncertainty, strong payrolls in focus. Australian dollar, US dollar, RBA warns on entrenched inflation risk. BNY.
Trump administration set to revoke basis of U.S. climate regulation. Okay, so just recently, oil prices went lower because of IEA cutting future demand forecasts. We track that, bro. We do supply and demand analysis. We use the EIA, but we also use the IEA, the OPEC. Yes, okay. We use the OECD, we use the World Bank, and we use the IMF. But that's it. Only those institutions. And we include that in our demand out. Cool, right? Isn't that nice? So this should flatten out a little bit. But seasonally, that looks smart to me. Remember, it was 44, now it's 88. Holy smokes, what's changed? Well, the entire world and the normal season and geopolitics. Like, dude, the world does change. Trust you, me. So just so you know, we're eyeballing those charts for you. And look at what is going in fun. Oh my. In particular, look at the 5 and the 10. Holy schnickersnucker. You're like, well, wait, I don't understand the yield curve and all that kind of stuff. Well, why don't you do some reading down here? And we break it down into interpretation, stuff like that. And we're watching the markets over sort of the longer term. And dollar, not that strong, nor that pretty interesting. And even though we've had a tear on the yen recently, over a longer period of time, Nasty. So, yen not good, stock market not good, gold still may be good. All of that from one page, bruh. Pretty interesting, huh? So I'm really looking for tomorrow's COT report. Speaking about that, I'll be over at FX Street tomorrow. Just so you know, you know. And I did swing trading earlier today over at TRADARS.com. I thought we'd probably just continue that. Oh, I thought we'd just continue that today. And Aiden does swing trading for us, but I like right. This is the one from earlier today. So guess what we have planned out hours ago on this particular currency pair? What do you think we planned out? Up, down, or sideways? We did this hours ago. In extraordinary, like this, as much clarity as humanly possible. Covered it from 18 different angles. What do you think? Were we up, down, or sideways? Sorry, man. I've been up. I've been up, man. I'm not getting enough sleep. Come on, YouTube. Up, down, or sideways? Must be a lag. Come on. This is supposed to be the fastest YouTube can stream. Lowest latency. YouTube. Come on, YouTube. All right, so now I can't tell if it's YouTube or everybody here has got a broken finger. But this was up, up, or up. What you're looking at is this is the buy. Plan A was we covered it on multiple time frames. We covered it seasonally. We covered it technically. We covered it fundamentally. We covered it monetarily using just we discussed monetary policy at the Bank of England. We talked about Starmer's political problems that are the talk of the day. And we talked about the dollar, and we talked about stop loss placement, lot sizing. We got it right. Cool. It's nice to be right. Huh? Cool. Now, for those that were there, you know for how long. For those that are here and not paid members of TRADARS, then you don't know if we planned out today, tomorrow, next week, next month, next quarter, or the rest of the year. Well, that's for us. Yeah, that's for us. Because that takes a lot of time, a lot of effort, a lot of work. Even just understanding the risks to it as well, because we don't know if it's right. It's just not wrong at this point. So anywho, we call that swing trading, bro. Yeah, we call that swing trading. can take a look at euro buck. So we have a plan for next week and the rest of the month and into next for euro dollar. So I bring this up because I want you to be trading like this. This is how I want you to trade. I want you to succeed. And so I'm trying to lead by example here and say, we've planned this out months in advance. And we have already planned out what to do between now and next week. So here it is Thursday morning in the United States of America. And this week is already planned out. Next week is already planned out. The week after is planned. The week after is planned. The week after is planned. And the week after is. And I'm trying to show you, if you walk into New York and you don't know what's going on and you don't have a general idea and you think every day is a new day, I'd recommend to open your heart and your mind to maybe expanding your knowledge of the global foreign exchange market, the commodity, the crypto market. There's a lot going on. But if you don't even have the data, it's not like you're confused. You just don't know. And that's a glaring gap in capability, right? Let's do crypto. You like the crypto? Is crypto coming back? You hear this a lot. What is the pink zone? A buy zone or a sell zone? So, having analyzed yesterday, that's today's sell zone. Just basic technical. Now, I can see the MACD. You're like, Wayne, there's no MACD on the chart. Oh, do you need me to draw it for you? Let me just tell you, MACD is below the histogram waterline. It's been rising up toward it, and it is now starting to cross and turn back down, potentially for a new sell zone. And you're like, Wayne, I can't see that. Oh, add it, change the template. Standard. This is the template I use in the book. Cool. There's your MACD below the histogram, rising back toward the histogram, and soon will turn south. And that might be your sell zone. But you better be risk off. How do you know to be risk on or risk off, or very risk on, or very risk off, or neutral? What are some of the things that you review in making that? VIX, dollar index, the 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 90-day, 3-month treasury, the 210 spread, the S&P 500, and NASDAQ, the Nikkei, the FTSE. Are you looking at junk bonds? Are you looking at corporate quality bonds? Are you looking at gold and oil? Are you looking at the COT report? Those are just the absolute very minimum things you should be tracking now, short term, medium term, and long term. Bare minimum to understand if it's risk on or risk. Thing is, if you believe you're risk off, I also know the correlation. So if it's risk off, then I know what to trade. If it's risk on, then I know what to trade. If it's mixed, then I probably have to do relative strength and do some cross bear, right? But the thing is, you have to know the risk first, then you have to know the correlation, and then third, need to know technically how to trade. So I'll just throw it out there. Let's say you are a risk off person because you've analyzed all of that and your analysis tells you the markets are more risk off than they are risk on. So you're like, leaning towards it. Good. So you would sell them. How do I know? Well, I've analyzed. I have the data. Quantitatively, I can show you. I know. It's factual. It's not even my opinion. I actually want Bitcoin to go up, but if I thought our current market conditions are risk off, then I know to sell them. Cool. So now I'm really focused. I can open up my chart. Now, of course, Aiden does this for you as well, but you can open up your chart. This is one way to skin the rabbit. You can use oscillators of all kinds. You can use moving averages of all kinds. You can use different time frames. You can use daily pivot points. You can use price action. You can use Elliott wave. If you don't know to buy or sell, you can't do any of it. You have to have that decision. You have to know where you stand. If you know you're a bear and why, then you have the conviction and the strength to get out of bed and do what needs to get done. And so now I'm more like a sniper here. I'm sitting on this hour, it's going to be forever, but this hourly chart, and I can wait. For example, I could make a decision if or when this turns down, I get short because I'm looking to sell lower high. And that's the only way to make that. Cool. See? Am I right? Oh, I don't know if I'm right, but I know precisely what I intend to do and why. So you better expect me to do it. Huh? Because that comes from confidence. You're like, Wayne, MACD is too slow. I want to use stochastic. Great, because that'll measure the 2155 cross as well using different mathematics. It'll instead of using the moving averages, it's looking at the candles. So to get Stokes to roll over, first of all, what it's telling me, and you should know what it's doing. The math of it is telling me that up until now, candles have been making higher highs and higher lows. Higher high. If it crosses over, suddenly it would be telling me we are no longer making higher highs. And in fact, if we cross over and drop back into the trade zone, we are in fact making lower lows and soon, especially after a lower high. So let's say, let's think about this. You're a bear. You're a bear fundamentally, you're a bear technically, you're a bear seasonally, you're a bear based on risk assessment, and you check the correlations, and this makes sense. You'd be a bear. Yada, yada, yada. 21 is below the 55. MACD is ready to cross over. And you are now measuring a series of lower highs and lower lows. So this would roll over. Well, does that mean you shorted a pullback in a downtrend? And this, if you use pivot points, will tell you this is also our expected sell zone. So wait. Based on what yesterday did, that's our projected sell zone? Yeah. And then you could use moving averages, price action, pivot points, oscillators, price action, and sell a lower high in a sell zone in a downtrend? Yeah, if you want to put it that way. Yes! Yeah. Pretty hard to compete with that. You know that's smoking hot like fire. When I turn, you desire. I'm fresh in you, 'cause you white. I ain't lying. I ain't dying. Up to number one is where I'm flying. Joy, pain, sunshine, and the rain. Sorry. Sorry. I just slid into the early 90s. Sorry about that. Can't help it, man. So, do we know it'll work? No. But you better know what you intend to do, huh? And so, if you had this trap, is this the retest? I don't know, but it makes these moves now very interesting. I don't even need to see price. I don't need to see the price chart because I know how MACD works. I know what it's measuring. And I can see the price chart by looking at MACD. You should know your tools that well. I don't need to look at the price chart. I have Stokes. I know my Stokes settings and I know precisely what it's measuring. So I don't need to see the candles because, well, Stokes sees the candles. I don't need to see the moving averages. Well, MACD sees them. I see everything I need right here. The biggest thing, and we were talking about this earlier at TRADARS this morning, is knowing what your strategy is. And by strategy, I don't mean the technique in which you kick down doors. I mean, what is your plan to win the war? Strategy. Are you a bull or a bear? Kicking down doors is a tactic. Okay? There's a right way and a dead way, of course, but we're not talking about the means to which to remove a door forcefully and quickly. So now, let's say fundamentally and seasonally and all these different things, and I've done all the correlation, and I'm quite certain this is probably going to fall, not rise, under current market conditions. You see? So, like, it's well informed strategic advantage. Now, the next thing is, you know, doing the job. And so at this point, I don't even care what the price is. Okay. Because I'll only short a lower high. I can look at MACD and tell me this might form a lower high. Has it done it? No. But if it does, I might be interested in taking a shot to the downside. What about price action? Is it at all in any way bearish? No, it's not. How can you tell? I'm looking at the stochastic. I can see the candle with my mind. Huh? Don't you play your Jedi mind tricks on me, boy. Oh, look. So now I can just sit here and wait. Forex is boring if you do it right. If you're excited and having a good time, you're probably over leveraged and you're actually surprised that you're making money on that trade. The thing is, most of the time Forex is boring because you're waiting, because you've done your analysis up front and you created a trade plan up front, and now you're waiting for it to come to fruition. So there's lots of waiting. And if you make money, you're not surprised. Well, it was logical. I mean, it makes sense. That's why you did the trade. What's more surprising is when it doesn't work and you're like, what idiot bought Bitcoin like that at that price with the charts like that, with market conditions like that? Like, what kind of idiot would buy that lower low? Well, sometimes it happens. You don't have to be smart to trade, right? So sometimes it happens, but that's when your stops are hit and you're taken out before it's troublesome. But the thing is, you're like, really? Huh. You were wrong about the market. You were not wrong about market conditions up front, and you were not wrong about technical analysis up front. And you're not wrong about the fundamentals and macroeconomics and comparative analysis and correlation. You're not wrong about seasonality. But besides all that data, sometimes it doesn't work out. And then you find out, um, someone in the UK cabinet is kicked out because of his relationship with Epstein. Wasn't on the calendar, bit of a surprise, going to be a challenge for the pound. Um, yeah, and if that leads to the prime minister having to step down, then you're like, oh, 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 oh. And sometimes you might have a beautifully thought out, planned out, strategic buy of the pound, and you get it wrong because of something like that. Well, it's not your fault. You weren't wrong. Things change, the variables. But if you're trading by the seat of your pants from gut instinct instead of intellect, it ain't gonna work. Just there's no way you can beat the odds long periods of time against someone that is actually measuring everything statistically and knows what is probably going to happen, knows the probabilities. It's right. Oh, you see? Uh, is that going to lead to this to cross? Maybe. Okay. It may be the MACD contraction, MACD kiss, and MACD cross, which we think will come up or occur in the next few hours. Maybe this is a sign that it has already begun. And you can front run. Well, once again, that's your decision, but you need the data and you need the strategy. Otherwise, all these things like moving average, crossovers, and oscillators, they're going to contradict each other all the time. And you're like, well, what am I supposed to do? Am I supposed to buy it or sell it? This one's pointed up, that one's pointed down, this one's going sideways. I don't understand. Well, yeah, you don't understand that you're looking at three different time frames, and none of them have any weight to you. You think they're all the same. Ah. And so throughout TRADARS, you'll see our mathematics, especially in multiple time frame mathematics, which we do for a lot of different things. And we give you all the formulas and stuff. And you'll see we'll wait. And so, how do I feel about long term down, medium term sideways, short term up? I love it. I'm excited. So, over the last few hours and few days, price has been going up. In a long term downtrend, dude. Then I drop into these charts. And as soon as it goes from up to down, from green to red, yeah, I'm long term short. I actually want to see short term green candles so I can sell it. But I'm not a counter trend mover. You might look at what I'm doing on a 15-minute chart and you're like, dude, that's a counter trend. Why did you just sell that thing? It's been smoking hot. Yeah, it's been smoking hot for 2 days, but I've been selling this for a year and a half. So I'm just adding another one. Big difference, right? So that's what we've been talking about over at TRADARS the last little bit is about portfolio construction and management of foreign exchange or crypto position, or carry trading, which is the same thing, but you're designing it to earn carry. So we talked in great length about carry trading and carry selection and how to do that type of analysis, right? Well, these are long-term trades. Entering and exiting the trades are just what you do on a 15-minute chart or hourly chart. But you don't make big boy, big girl decisions on a 15-minute chart. That's just tactics. Huh? Where on the door you kick isn't a strategy. Okay. So now I can sit back and relax and I can read the chart. Now, if I'm on an hourly chart, it's going to take in like forever. But like I said, I started to ooh and ah. So the next thing is we got our not higher high. We got our lower low. The next thing is if this next 1 hour candle makes a lower high, lower low, if you know how to calculate your stochastic, this will be on its way down. The thing is, have you already missed it? Well, there's no way you would know to be ready, willing, and able staring at hourly candles that specifically. Well, then you're going to have trouble trading because you don't know to be ready to short here. So how do you know to short here? Well, the only way you know to short here is it's already happened. And if it's already happened, someone else did it. Somebody else knew. Somebody else had it planned. Someone else put the money in before you. And now they're making money. Now you jump in. And at some point, they're going to take their profit, right? But the thing is, you don't know. They already know. They knew to enter. They know where to exit. And we call that support and resistance. But the problem is amateur retail traders, whether in Forex, commodities, stock indices, crypto, they usually follow professional traders. So after the traders are already in and after the traders are already got their stop at break even, then retail piles on in the middle. And then professionals already know where their stops are. So we hit the stops. Amateurs don't do anything. And then prices come back and then knock the amateurs out somewhere close to the middle. So if amateurs enter trades in the middle and exit trades in the middle, I think by definition that's mediocrity. There's almost no corn on the cob. The crows have pecked away. So you're better off, uh, having better plans, I suppose the way to say it is, where you're like, okay, somewhere in here I want to sell. Good. Are you short here? No. Why? It hadn't happened yet. But okay, you're a little slow. And then, okay, wouldn't you agree like that is an area of interest and that is an area of interest? And if you look at maybe psychological levels, pivot points, analysis of higher time frames, you can probably find some additional ones where you know your risk increases. Okay, another one would be like, do you think this will act as support? Yeah, probably. Do you think this will act as support? Probably. Do you think this will act as support? Probably. Do you think institutional investors have taken this into account? Yep. So you don't want to be the trader, the monkey in the middle here, where you 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 short here and then you exit here and you right because you short late and then you exit late and then you short late and you exit late. The difference is if you can be a little closer to here and a little closer to here. I don't mean sell it before it's fallen. No, I never said that. And I didn't say get out before it's risen. No, a little bit after and a little bit after, but not in the middle because you don't want your profit potential, to be like this distance. Okay, you want your profit potential to be that distance. The other secret I should probably remind you is New York's already done. It's already over. Wait, it's only 11. Yeah, yeah, yeah. No, but this was all planned out yesterday. So this is the other sort of secret here. If I'm allowed to give you the secret, is that okay? A professional would have had sell there. They've entered the trade. They drop the stop. They're done. They walk away. And then you mess around for the next 3 or 4 or 5 hours, choppiness and all that kind of stuff. But the group that sold it's done. They'll pick it up tomorrow. Oh, they're like, oh, good, it's profitable. Move the stop to break even. Wonder what I'm going to do. Asia's about to open. What am I going to do between Asia Open and London Open? That's what they're thinking. And more often than not, by the time you get to New York, we've already hit the targets for the day. For the day! So let's say the whole day was bullish. You may notice that it stays bullish for an hour or two in New York, and then it goes not bullish for an hour or two as we get closer to the London close, and then we get closer to the New York close, and all of a sudden nobody's trading, right? So you lose volume and volatility, but part of it is if we've been bullish since Asia and bullish in London, and now we're rolling with green candles into the New York Open, if anyone's going to trade, it's likely bulls selling, bulls taking profit, not bears selling. Bulls taking profit and they're done, or bulls hitting targets and they're done. And they get to the office, let's say if you're European, let's call it Shanghai lunch. Moscow open, Dubai open, Frankfurt open, London open. So the money is flowing in, and somewhere in that new flow, you enter trades in the direction of the logical, technical, fundamental trend. Do that, you'll be okay. You'll be fine. You'll be fine, right? Entering into something that's already trending based on logic, intelligence, and flow. Remember, capital flows around the world for a reason. It's logical. Money is a commodity. You need to grease the skids when you're carrying heavy weight. But when you're not carrying heavy weight, you don't need grease. The grease is the money. The weight is the trade, the investment, the exchange. Hey, Australia, I want to buy a whole bunch of iron ore and coal. They're like, cool, give us some Aussie dollars. I'm like, well, okay. So now we got to go to the interbanking system, and I got to convert my money into Aussie dollar because I don't got none. So I buy a whole bunch of Aussie dollar, and then I convert my Aussie dollar into iron ore and coal, and then I ship it back to my home. And why do I need it? I need to make steel because spring is coming, and there's going to be a whole bunch of construction in my country. I forget if I was talking about any particular, but in my country, we're going to have a booming demand for infrastructure projects that we're going to require a bunch of steel, and auto sales are likely to go up. We're going to need a bunch of steel. Whatever. We need steel, so I'm going to order it in advance. I'm going to get my iron ore and coal from Australia because it's the best. And so I need to understand these things to just simply know is if I'm talking about U.S. dollar being converted into Aussie dollar and Aussie dollar being converted into iron ore and coal, and iron ore and coal demand goes up because of a perceived increase in GDP, then GDP is the U.S. dollar. And the U.S. dollar is the Aussie dollar. Aussie dollar is iron ore and coal. Iron ore and coal is steel. Steel is, an expanding economy. And they're all related. So now, and we had a question about this today at TRADARS, what price? Isn't that the easiest thing about Forex and crypto and other forms of trading, stock indices, commodities. Look at these zones that I've drawn here. Would you consider that reasonable support and resistance? Now, YouTube has a big lag today. I don't know why, but I'm just going to assume it's a rhetorical question. You're like, yeah, that looks like support and resistance. Well, there you go. Those are the prices. What's the problem? Problem isn't figuring out those prices. And it shouldn't be a problem for you to decide if you're a bull or a bear. That shouldn't be a problem either. So to me, that's easy. Macroeconomics, seasonality, that tells you if you're a bull or a bear. And Aiden does it automatically. So, like, what's the problem there? And then you're like, well, what about support and resistance? Yeah, well, that's the easiest thing ever. Dude, just connect common prices. Okay, great. So, what is the most difficult part? Well, once you've decided that you want to sell Bitcoin, and you've done it because you believe it's the market is risk off because you've analyzed, 150 variables. Oh, well, that analysis says risk off. So if the risk off continues, we don't know, things change all the time. But if that continues, remember we look at it on 3 time frames, so it has been risk off. You should know that based on our correlation coefficients, that in that case you'd sell Bitcoin. That's one of the major reasons. Cool, 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 cool. So now the question is, well, when? So if you have all the other part together strategically, okay, and you know that you need to front run New York. So I've taught a lot about timing of your trades. So what is it, 10? This is 9. Okay. All right. Perfect. Perfect. I prefer this one, but this one. All right. You know when the volume and volatility increase. You know. You know it. You shouldn't. If you don't know, that there's another crazy gap. But you're like, you know when to expect the volume and volatility. There's going to be bulls come in, there's going to be bears come in, but there's definitely a price discovery. Now, for you, you already know the price and you know you're a bear. We're in the purple zone. You know that's somewhere around there is the right price. You know that New York Open is an increase in volume and volatility, so you know it's likely to be coming soon. You know you're a bear fundamentally. You just know, like, dude, so now it's just, when do you decide? That should be 99% of your game. You decided in there to get short. Cool. Cool. And now if you're right, you should be short for more than 20 minutes because of the amount of work that went into your trade plan. And you've calculated your stop so you're not over leveraged and you have wide enough stop. And now it's the timing of it. So you probably recognized it as a head and shoulders. Probably took the shot here or here. Now you're going to wait it through. And if you get below this purple zone, you're going to move your stop to break even. And based on your analytics, Bitcoin's going to drop in, what, 15,000? 20? What do you think? Well, I've already analyzed all of that, too. And that's how you trade, my friends. So the most important thing is you know your intention. What do you want to do? Are you a bull or a bear? I don't know, Wayne. Well, then you're either a bat, which is a broke ass trader, or a pig, and pigs get slaughtered. Don't pretend to be a bull or a bear. Get off my team if you're not sure. Huh? You're either a bull or a bear. Okay? You're either disciplined, 100% disciplined, or you're weak. So we have clarity. The next thing is, can you even spot the opportunity? And if you can spot the opportunity, do you have the guts to pull the trigger? Well, that requires confidence, but if you're winging it and you're not sure what you're doing, you don't have any confidence. You don't have the right stuff. So you better start with confidence. Confidence building is huge. Hey, how about an artificial intelligence built on a large language model by me that does fundamental, technical, and relational mathematics and can analyze millions of variables to come up with hardcore data to nudge you in the right direction based on logic and intelligence. Help you go through, you build up your trade plan, you even filter your trade plan, you come together, you get to the chart, you wait, you pull the trigger, you drop your stop, and you take a walk. Or you wing it. But if you're random inside of a seemingly random market, what's the likelihood that you could achieve consistent results? Totally mathematically impossible. So that doesn't. So I discussed a lot of this earlier today in even more detail on how to construct and when to move your stops and when to add to your stops and how to lower your risk and all that kind of stuff and how to increase your probabilities. But for the increase in probabilities, you're going to need logic, quantitative logic. So you know, okay, the probabilities are here, so I'm going to try to trade there, and I'm going to try to enter it this way and manage the risk that way. And if you manage it correctly, you you're able to have 90% less risk is what we're talking about. Quantitatively, 90% less risk and probably 1,000 times more opportunity. Yeah. Which pays a lot more than just a pure scalper. I think you should learn scalping and intraday trading for sure. I think it's an absolutely necessity to have those skills. But that being said, if you can add to that by knowing when not to scalp, like you scalp in, but you position out, you scalp in, you swing out, that's when you get it. And that's when